Hello, friends. I wanted to reach out with a short video message surrounding loss carryforwards, what that actually means, and working with your tax preparer. First off, I'll say for compliance purposes, and I remind all my clients that this information I'm going to provide you today is not intended to be a substitute for specific individual tax advice. We do suggest that you discuss your specific tax issues with a qualified tax advisor. Albany Financial Group and LPL Financial do not provide tax advice or services. So with that in mind, as the regular tax income filing deadline is behind us, I wanted to give everyone this reminder regarding their tax returns. Once you receive a copy of your tax returns, I'd like to review, if possible, a section that deals with what's called loss carryforwards. So you can find this under section Schedule D, line item 6 and line item 14. Now, some of you, this may not be applicable, and that's okay, so feel free to disregard this part of the conversation. But long story short, on Schedule D, you can look for or ask your tax preparer for what's called any loss carryforwards if they exist. Okay. So you first off want blessing from your tax preparer if you do have loss carryforwards, and then B, if they are comfortable, asking them if there's any moves that we should be making on our end to offset. Now, what do I mean by this in layman's terms? So what a capital loss carryforward is effectively a loss that unfortunately the IRS did not allow you to use to offset other income. So there's certain types of losses that can only offset certain types of income. And if you have too many of these losses, I won't bore you with the calculation, they can what's called carry forward from year to year. So long story short, you have some losses in your accounts that haven't worked for you yet. Now, if your accountant provides you blessing for us to work against those losses, what it may allow us to do in certain types of accounts you have with us is get out of tax inefficient investments in some of your accounts. This would be specific to non-qualified accounts, if you heard our last video, and do so without paying taxes. So typically, if we're getting out of an investment at a gain, it potentially could trigger what's called a capital gain. But if there's losses that you have built up over time, and your tax preparer has verified this, and your tax preparer would like us to do some offsets to those losses because they think you may not be able to use them in the future, now may be the time to do so. So once again, connect with your accountant or tax preparer to verify you do, in fact, first off, have loss carryforwards. And then secondly, if your tax preparer is comfortable and provides recommendations to work with us to offset these losses with any potential intentional gains that we'll make on our end. So hopefully this helps, and enjoy your day today.